everyone, John Henry here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 13th of the month. Pretty slow, kind of choppy, sloppy day to kick the morning off, but we did start seeing a little bit of volatility coming into the end of the day. I think a lot of today really more so has to do with the fact that we're coming off the backs of we're coming off the backs of a daylight savings time, and this time around is usually a little bit harder when you lose an hour. You know, you wake up and it's 8 o'clock and, well, it kind of feels like it's supposed to be 7 and everyone's a little bit groggy. And add on top of that the complete lack of news today for the U.S. session. I think you'll probably figure out why today was a little bit slow in the morning, and ironically enough, as the day went on, it started picking up volatility. Shocker, right? Everybody started rolling out of bed, and, well, they finally made it to the office to start trading at around 10, 11 o'clock. Now, before we jump in, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list to be notified every time one of these videos comes out. Along with that, in the email itself, we go over a bunch of things that we don't have time to talk about in this video, and that's going to cover everything from stocks, options, crypto, you name it. If it's moving, it'll show up in there at some point, so it's a really great way to make sure that you're staying in the know of everything that's going on. So make sure you sign up for it so you don't miss anything there. Next up, make sure to click on the Live Trade Room subscription and trial info. From there, you'll be able to register for a free 3-day trial in the Live Trade Room, and then that way you'll be able to kind of get your feet a little bit wet, hang out with us for a few days, ask some questions, and see what we're all about. It's a really good way to kind of jump into the Live Trade Room with us, see what we're trading, see how we're trading it. There goes the 4 o'clock bell, and just kind of check everything out. You know, it's a really awesome way to, like I said, dip your toe a little bit, get your feet a little bit wet. Now, looking at the markets overall, the euro is relatively range-bound, kind of sideways, not really a whole lot going on. We did find a lot of heavy resistance coming off of the top here. They popped up, tested it again, completely failed, and a lot of that was on some news with some decent follow-through. Now, as expected, we did see a little bit of sideways, one more push down, and now we're just flat range-bound. The area that I really wanted to see was down here on a possible trap low, and, well, they pretty much double bottomed. You know, if you get really, really close and zoomed in, and we make sure that we mark that as close as possible, we can see that they did trap underneath it by just a tick or two. And that's actually a really good sign. Basically what that shows us is that, well, there were so many traders who tried getting underneath there, right? Buyers buying up, ripping the market higher, trying to trail their stop along with price. And, well, it didn't work out so well, because a lot of times when you get those major reversals off the bottom, you'll have a higher low and a reversal, and eventually the market will come back, trap that low, and then go flying higher, and that's exactly what we have right here. Now, in this case, flying higher might be a little bit of an overstatement. We didn't exactly go flying higher, but we did catch that trap, and the fact that it happened so pronounced with 1 or 2 ticks on a trap before reversing back up, that does give us a pretty big clue that we probably did trap that low, and buyers are looking to rally the market higher. Now, a couple caveats to that. We do have a pretty big bear leg to the downside. In this bear leg, there are going to be a lot of sellers who are waiting to sell into this at a slightly better price. We have a lot of movement to the downside, big bear bars, right? Big bear bar, lots of breakdown momentum. And a lot of sellers just really don't want to sell way down here, because the profitability on the trade, although it's slight, is not as much. Why would they want to sell here when they can try to sell a little bit further up at a slightly better price to drive the market down and have some room for a nice big run? So I think that's what a lot of traders are looking for. Even though we do have the potential of a bull rally to the upside, it's hard to ignore the fact that there are going to be a lot of sellers that are waiting for a better price. Something that we need to be keeping an eye on. Now, of course, add to that the fact that if we measure from high to low, that's about a 50%. We also have 4-hour support and resistance coming in at 23,695. There are a lot of things beginning to stack up in that same place here that might cause a little bit of trouble for the buyers to break through. In the overnight session going into tonight, really I'm just planning on the same market movement. Range bound overall, looking to buy low, sell high. But given the trap on the lows being so pronounced, I think buying low makes a little bit more sense if we can get some pullbacks. Now, over on gold. Gold did end up coming back and retesting that 18.3 trapping area. That was that earlier low point. The sellers tried coming down. They finally were able to get out at break even. They even had some opportunities to get some nice runs to get out of those original sell positions. If they sold back here and then sold more in a rally, they were able to exit when it returned back to that normal price, and now we have a trap below the lows. So that trap below the lows, we failed to close, even tried to get a big run, that failed to close. And then when they finally were able to close, the market stalled and immediately reversed back up. So this is a big zone of confluence. We're finding a lot of buyers that are buying into these dips, huge candles down here, and all of it is wick, and when they are finally able to close past it, it immediately bounces right back up, showing us that 18.3 is a big line in the sand, and a lot of buyers are going to be looking for that reversal up. Now, obviously, buyers have been accumulating at the lows, otherwise these big old wicks wouldn't show up here. But one thing that I do want to see really is just look for a nice rally up, maybe break this previous swing high as some proof, and then see the market come back and retest that 18.3 one more time. Now, on that reattempt, sometimes when the market breaks away like that and it tries to come back down, it might miss it by just a little bit. And so instead of 18.3, it might come down to like 18.6 or 7, where it comes really close, and then it's gone, right? It takes off again. Those are my favorite types of reversal sort of situation type trades, patterns, whatever you want to call them. And that's going to be what I'm looking for next on gold here. So we have a very strong level of support coming in off the lows at 18.3. We have the buyers showing defense. The first time we closed underneath it, immediately failed back up. So I'm looking for that bullish continuation in the overnight session. If we can get a pullback, 18.3 all the way up to 19 or so is going to be a zone of interest. On crude oil, we have a relatively stagnant market. Not really a whole lot going on for crude, and if anything, kind of have that descending wedge working its way forward. There's not much going on in terms of the way that crude is kind of moving. We cycled off that 62.85 horizontal support and resistance, and just nothing much else happened. They came down and trapped the low. That low trap looked really, really nice, and now we're back inside the wedge, and their buyers are trying to hold that wedge again. Now, that all said, the wedge might be a little bit further up, right? Now that we have more information, we could widen that wedge out, and that might just be kind of coincidence that we're finding some bouncing here right now. But notice the last time they dipped down here, we had huge buying support there, and now we're seeing huge buying support again. And every single time one of these dips has happened, we've had a lot of buy support on the downside. So every time, right, every time that buy move has happened, it's been slapped right back down. Now, conversely, if you look at the sell side, there is a decent amount of sell movement here as well. Lots of big wicks across the across this same zone, right? So it looks like we're trying to build a little bit of a range. And given the fact that every time these big wicks form, it tends to reverse, or at least pause for a little while, that is something that we want to keep our eyes on. It's very consistent on crude oil right now, and we are coming off the backs of a big old wick. So that gives us an idea that, well, historically, the past 20, 30 times that those big wicks have occurred, we found a pause into a potential reversal, and that's the same situation that we're running into right now. So we have a big old wick happening right now, and given the historical accuracy of those big wicks, normally I don't really care about how the candlestick forms per se, but given how well it's worked previously, it is something that we have to pay attention to. So there is a potential in the overnight session to go sideways to potentially up a little bit, assuming that that is going to hold true with the rest of the times that that has happened. Now, overall, we are still in a big old wedge. We're cycling more recently off of the lows of the wedge, so buyers are looking to get back up towards those highs, and that horizontal support and resistance lines up almost perfectly with that wedge bottom, and that isn't too far away. So if that big wick on the bottom does show a potential reversal, we might be gearing up to get that rally up into that big old resistance area a little bit further up, and that's going to be right there. So that's going to be the area that I'm looking for. And going into the overnight session, I'm anticipating a bullish bounce. Again, a lot of that just off the backs of that bullish wick here on the 4-hour, but it does also make sense. We're cycling more recently off the lows of the wedge. Buyers are going to want to go back up towards the highs. So we have a kind of a technical / fundamental-esque sort of view to the upside either way on crude. And then over on the index markets, the S&P catching a nice rally to the upside. As anticipated, like you almost always see after a big rally up, we see an attempted pullback, and the buyers tried getting it going back up. Now, we haven't actually made a new high. A lot of times when you get that big rally up, they pull back, bounce up to the new high, and then from there it can go really far, or it might just kind of peter out as soon as it makes a new high. They actually missed that new high. Now, arguably, they are trapping above that previous swing, but I don't think the bullishness is necessarily done right now on the S&P. Buyers are buying into this dip, assuming that we're going to get another rally up, and that primary objective is going to be to retest those highs. Now, given that we did miss the top, one area of interest that we do want to keep our eyes on are those high closes. Very frequently, when you have a big rally up, buyers will start buying for any reason. They'll buy the closes, they'll buy below bars, they'll buy bear bars, they'll buy bull bars, they'll buy every bar they can get their hands on. And when it starts pulling back, then they start buying into everything with the assumption that when it goes back up, they're going to exit everything on that break-even test, that last entry point that they had at the highs. And that's going to be exactly what I am looking for here. So that gives us an area of resistance at 28.01, and we'll make that purple like we do for all of the other break-evens. It's dark purple there. And that's going to be the big area of interest in the overnight. So I don't think the bullishness is necessarily done. I think we're just pausing a little bit. Buyers are ramping up to gear up another rally to the upside, and primary objectives right now are 2801 to a new high. 2801 is a conservative upside objective. A new high is a little bit more aggressive. And if we can go a little further, we might be able to reach out and test that ascending wedge top. And that ascending wedge top, now that we have a little more info, could even be a little bit wider, something like this. And that does give us a decent amount of upward room all the way up to around 2834, 35, even up into 2840, depending on how long it takes. So we've got a lot of upward movement potential if we can break out of all of this resistance ahead of that. So in the overnight session, looking for a little bit more bullishness, but not nearly 40 points higher, more so looking for a retest of 2801, and then the market will have to decide from there. So that's going to do it for the outlook. Now, in terms of tomorrow's news, we do have a couple things. A little bit better than today. Today having no news at all. But tomorrow at 6 o'clock out of Germany, we have the ZEW economic sentiment. The previous was 17.8. There is no forecast. At 7:30 out of the UK, we have the spring forecast statements coming out. And then at 8:30 tomorrow morning, we have the core CPI for the US session. That's for February, forecasted at 0.2%. The previous was 0.3%. So we do have a couple things to hopefully kind of wake the markets up a little bit. Going to have to get a couple extra cups of coffee this week because, as always, that whole week usually after daylight savings time switches over, everyone's a little bit kind of groggy and shaken up a little bit. Everyone's off their schedule, So it takes a little bit of time to kind of get that back into the groove. And keep in mind, Europe hasn't rolled yet. They haven't done the daylight savings time thing yet, so we're going to have some funky closes across the board. So everything's going to be a little bit weird for a week or two until things begin to normalize and everyone kind of gets back to their normal selves, being able to sleep correctly. And if you have kids, having the kids sleep correctly through the night, I think, is an even bigger part of that. Ask me how I know that one. Anyway, so that's going to do it for the outlook. And, with such a slow start to the week, it was expected. Now we have a little bit of news. People are back on schedule a little bit. We should start seeing the market return to a little bit more of a normality as we go further into the week. That's going to do it for this one. As always, like we always say, doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.